Welcome back to the Indicator Library. Today we're covering one of the most widely used and often misunderstood trend indicators in trading. SuperTrend. Most traders see a line that flips from red to green, but very few understand what it's actually calculating. SuperTrend measures volatility, and it uses that volatility to define trend structure. In this video, we'll break down what SuperTrend actually represents, how it's calculated using ATR, why the line flips from red to green, how traders use it for entries, how it works as a trailing stop, when it fails in choppy markets, and how to combine it with other indicators for confirmation. Let's begin. SuperTrend is a volatility-adjusted trend indicator. It does not predict reversals. It does not forecast price. It reacts. It measures volatility using ATR, average true range. ATR measures how much price moves, not direction, movement. SuperTrend takes that volatility and places a dynamic level above or below price. When price closes beyond that level, the trend flips. That's the core mechanism. Let's simplify the formula. SuperTrend uses median price plus or minus ATR multiplied by a factor. That factor is called the multiplier. The multiplier controls how sensitive the indicator is. Lower multiplier means tighter signals. Higher multiplier means smoother trends. So every SuperTrend setting is simply a balance between speed and stability. You'll usually see SuperTrend displayed in two colors, red and green. When the line is red, it sits above price. That signals bearish structure. When the line turns green, it sits below price. That signals bullish structure. But here is the key rule. The flip only confirms after the candle closes. Never trade mid-candle flips. Confirmation matters. A basic long setup happens when the line flips from red to green, and price closes above the line. That confirms momentum has shifted upward. For shorts, it's the opposite. Green flips to red. Price closes below. That confirms downside pressure. It's simple structure. But simple structure requires discipline. One of the strongest uses of SuperTrend is not entry. It's exit. SuperTrend acts as a dynamic trailing stop. As price moves higher, the line moves higher. If price closes below it, that's potential invalidation. This removes guesswork. You're not asking, should I exit? You're following structure. That's powerful. Now let's discuss reality. SuperTrend struggles in sideways markets. When price ranges tightly, you'll see repeated flips. Red to green. Green to red. Back and forth. These are false signals. This is chop. SuperTrend is not built for tight consolidation. It's built for expansion. Understanding when not to use it is just as important as knowing how to use it. SuperTrend performs best in trending environments. Higher highs and higher lows. Lower highs and lower lows. It performs even better after volatility compression. When markets move from contraction into expansion, a SuperTrend flip can carry strong continuation. Context always matters. Indicators don't work in isolation. Default settings are typically ATR length 10, multiplier 3, shorter settings, increase sensitivity, longer settings, increase smoothness. There is no perfect setting, only alignment with your time frame and risk tolerance. On lower time frames, noise increases. On higher time frames, signals are slower but stronger. Adjust based on structure, not emotion. Hi, I'm Indy. So let's summarize. So what is SuperTrend really? It's not a prediction tool. It's not a reversal tool. It's a trend alignment tool. It defines structure. It defines invalidation. It simplifies trailing exits. Used in trending markets, it can keep you aligned with momentum. Used inside chop, it will frustrate you. The lesson is simple. Trade structure. Wait for confirmation. Use SuperTrend to manage risk, not to chase price. Master trend first. Then, refine execution. If this helped clarify things for you, make sure you like and subscribe, and explore the rest of the indicator library. We're building real understanding here, step by step, and I'll see you in the next one.